Morning, everyone. Welcome back to the channel. I thought it was a good idea today to have an extensive look at the US dollar because it's relevant right now. So let's get on with it straight away. So I'm on the monthly time frame here, and if I don't remember wrong, before the 70s, the chart is actually coming from up high. So let's say as a whole, we're in a down move, right? What are we doing right now? Well, the last piece of the down move is this 1, 2, 3. Okay, impulse, correction, impulse. This is the all-time low at around 72, right? And since then, we are going in an up move, but it's not an impulse, right? It it could be either a correction or a slow start, as I call it, for a higher move. Now, where are we in space? Well, we're inside a range, which is defined by the last downside move. So this piece is operating inside this range, 1 and 2. You can see it, I've marked it with the light blue lines, right? So what are we doing? What are we doing from here onwards? Well, good guess. It's anyone's guess, really. We don't have a crystal ball when we look at the charts, right? But we can work with several tools and methods that enlighten us to what might be happening next. So if I'm looking at where we are right now, first of all, I know there's only two possible things that can happen. Either we're going to come and retest the all-time low again, so another impulse to the downside, or this thing is going to come higher, maybe retest the stop, and maybe continue and retest this stop. So there's only these two options. Our job is to pick the most likely scenario from when we are right now, right? But we can't do that just by looking at the monthly, right? We need to go on different time frames as well. So now let's go to the weekly for a moment. What do we have here on the weekly that can, let's say, possibly enlighten us a bit more than the monthly time frame? Well, first of all, we have one clear impulse that occurred, let's say, between late 2020 and ended up in late 2022. And then after this impulse here, we went on a big sideways move that appears as a correction of this impulse. Now, why do I say that? Well, first of all, this is a very complex pattern, right? And you can see this orange circle. When we were trading here, we were kind of in the dark. It was very complicated because right here we were in the dark because we didn't know what would have happened next, right? So imagine that you're trading. Let me get rid of the drawings first. Let me get rid of the. Let me enlarge this. Sorry. So imagine you're trading right here, right? And you have this piece here that can be finished and you're coming up pretty impulsively. Now, you would assume that this is going to continue because there's no divergence here. Well, actually there is, but I can't get into that detail right now. But either way, you can assume that this is finished and this is coming back up. And then look what happened. It did a move down, it did another move up, and another move down. Now, when this happened, we looked at the chart, and I immediately understood that this was the what I call the core correction, right? That I've marked with the orange circle. When that happened, then I understood the pattern. So until here, I wouldn't understand the pattern. But when it came here, I did understand the pattern. And I knew straight away that we would have had an up move first for this and another down move. Most likely of the same magnitude of the previous down move, which took us right where we are now. So when we were here, which was September 2024, I actually published this analysis, and I can show you. Let me go on my profile real quick so I can show you. I need to look. This is my profile, right? Profxedge, and dollar, of course. Otherwise, we're going to get lost in the charts. So here it is. Yeah, this is the one. So I published this on September 2024. Then it was updated, on March 28 and all of that. Now, we were here, right? This is where I was showing you earlier. Let me grab it. Right here. This point here is this one here, right? So I marked this as the most likely scenario. And I named it number one because there was another scenario. But the important thing is that I was able to forecast right here that we would have had an up move and a down move. So 2 consecutive moves, and we're not talking about an hourly time frame or 15-minute or 5-minute here. We're talking about weekly moves. This is the coming, September 24 to now. So it's 1.5 years, right? So basically, if you click play here, you'll see what happened. There you go. We had an up move and a down move. Now, I didn't get the magnitude exactly because I thought that it would have ended here. Well, too bad it ended a little higher, and I thought it would have ended earlier, and it ended up a little later. But that's not the concept here. The concept is that you are in fact able to do very accurate forecasts, and this is not based on assumptions. I could not know how the following 1.5 years would have developed, right? I didn't know what the geopolitical situation would have been, if there were any wars, if any more wars, if any more tensions. I didn't know about the trade tariffs back then. Any of that I didn't know, but I still was able to forecast because there is a way you can do that, right? So of course, if the scenario is invalidated, you also have a second forecast, which you activate in your trading schedule for the coming weeks, if that's the case, right? So I really wanted to show you this because I think this is very relevant. And this is why I'm here today, right now, because I think that this could be a turning point. So massive dollar appreciation from now on. Now, I understand that's hard to grasp, and it's contrary to what everyone's saying at the moment. And at least, on YouTube and social media, all the content is about, the US economy is going to fail, the dollar is going to go down in the hole to hell and whatever. But these are assumptions. You can't trade assumptions. You need to be prepared, and you need to understand what's going on the chart. You need to speak the language of the markets if you want to understand what the market is going to do next, right? So just to briefly continue on this note, I'll also show you that I was able to also pinpoint the right moment where one would have entered a long position at an optimal price. Optimal in the sense you could have held, well, you would have opened more than one position, but at least one of them or more than one of them you would have kept all the way until the end if you got a seat in the first row right at the beginning, right? So how was I able to pinpoint this? Well, this was a clear ending structure that went on for several days, and it's right here. I'll show you on the bigger chart. It would have been here, right? Right. So you can see it, right? Ending structure. Here it is on the smaller time frame. Now here I can't press play and see anything because I'm on the 30-minute time frame. So yeah, I got it. It's not possible to do that, right? So let's get on with it. So I already told you that I'm here today because this is a potential point of turn for the dollar. Now, how do we know it's going to turn? Well, we don't know for sure, right? Because this can come also a bit lower, right? It's not stop here, but continue to go and then turn. Or it can break out of the structure, correct, and continue to go to the downside. But here is where we will pay close attention on what's happening, right? So what's happening on the daily here? Well, we had a series of impulse correction, last impulse, bigger correction, and another one again. And what's happening here? You can see that it's smoothing out, right? So the lower lows are smoothing out, and you have divergence. So, sorry, I should have marked this maybe better seeable in the weekly. You have divergence. Now, that doesn't mean anything for the moment, and besides, it's not confirmed, because for this divergence to be confirmed on this time frame, this has to come up much higher, and this has to go back in the green. The histogram must pass the zero line again and come back in the green area. So then the divergence will be confirmed, because this red momentum can grow. The red histogram on the negative side can grow much longer, right? Much deeper, and continue, right? And if it does come to here, let's say this divergence is going to go and disappear. This is going to grow, and this divergence is going to disappear. So for the now, we are looking at a potential loss of momentum on the daily, but not on the weekly. On the weekly, we are still in the dark. But on the daily, yes, we're looking at a potential loss of momentum because of the increasing divergence and this loss of intensity, right? Now let's go on the 4 hour and see what's happening there. Well, on the 4 hour is where it gets interesting. So you can see the red dashed line is last month's high and low, so the month of January. And to be fair, the month of January did a low, but then it closed the month almost at 50% retracement of this low, right? Of this impulse to the downside, which is kind of an interesting sign, right? Then the first week of Feb, which is this one here, marked by the dark blue dotted line, dashed line, sorry. It went upside, and then we came back down. You can actually fib this if you want, because we came, I'm guessing, at a 50% of that move. Yes, correct. So you can see here, we retraced 50% of this move. That's a very interesting thing, because what this means is that we could go one more up. And if we do so, according to where this move ends, if it ends here or if it goes higher, and let's say, for instance, it goes above the month of January, well, then we could be turning for real, right? So this is a good point to see if you get any long setups. What I'm saying is this, basically, right? So let's go even more in detail, and let's look at the 1 hour. So what's happening here? Let me get rid of all these silly drawings. We don't need them right now. So what's happening here? Well, on the 1 hour, you had a move up, and then you had a 1, 2, 3 down, right? You can see this. Let me stretch the MACD. And this divergence on the 1 hour is confirmed, right? You can see this. So loss of momentum, loss of speed. 1, 2, 3, loss of speed. Confirmed, because we went back above the zero line on this time frame, and with an impulse. Now, this impulse came back down quite sharp by the end of the New York session yesterday. So that's not a good sign, really, right? So at the moment, we have this with this, which didn't break the low, right? Which sucks also. But we are crossing back again in the green on the 1 hour. In, let's say, 1 hour, we have to wait the end of this hour to see if this is confirmed. So what I would say, if this comes above this level and gives us a pullback, we can consider entering the trade for long. If this instead is a pullback for this down move and comes here, we'll take a long from here, which is better for us, right? So at the moment, do we have any sells? Well, yes and no, because the potential of this coming back down here is very high. And that coincides with the fact that today there's not the news today are possibly less relevant than tomorrow's news. So yesterday we had the NFP, and tomorrow I believe we have another news. I'm not sure if it's the ISM or something different. I forgot to check this morning. But what I'm trying to say is that we might get this move first and a good and a long tomorrow. So it appears that this is going to continue to go up here, but then today we should have a dollar down move, I think, for this. That would make much more sense. So did we have a trade? What is the most current trade? Well, if you go on the 50 minutes, you can check. The most current trade that one would have been in is this one. I'll show you. This failed. This breakout to the downside failed. It turned and gave a correction here. So the most current trade would be this. Now, you would have had to be really good to get this trade. You can only do this if you're pretty advanced, to be honest. That's okay. If this continues to go up, we'll get another trade. Depending on how the dollar index, I'll tell you now, depending on how the dollar index will end this week, this will tell us a lot, right? So let me go on the, well, I don't think the dollar index is going to end up above the previous month's high. That's out of the question. But if I'm going on the daily, what I can let me get this fib, which is in the way. What I can tell you is on the daily that if actually, let me go on the 4 hour so you can see the weekly, monthly, and daily. Actually, these are pretty. I should make them a little lighter. Oh, the opacity is turned all the way down. Hang on. Now they should be a little more visible. Sorry, I think they were not too visible. Okay, perfect. So the blue dashed line is the previous week's high and low, and the week before that high and low, right? The yellow ones, orange ones are the previous day high and low, and the red ones are the previous month, right? So why am I looking at this? Well, because if by tomorrow the dollar index will be above this level, let's say, by end of tomorrow, by end of Friday, so we will be back inside the range of the previous week, and we end up the week higher than the high of the week before that, so 2 weeks ago. Well, this is a good sign of upside then. So if this comes here by tomorrow, definitely next week we will trade. We will have a really good dollar strength trade, right? So let's see that. Even if you're not in this trade, we for sure will get a trade up at some point, either this week or next week. It's going to come. So I'm going to leave you with that. It's a really long video. It's already almost 20 minutes. And I just wanted to show you what you can do if you know how to read market structure, if you know how to read the charts and the language that the market speaks all the time. So have you ever heard, for instance, the saying that the best way to forecast future behavior is to look at past behavior, right? I'm sure you guys have heard that. So this is what it is, right? You can define, not guess, right? Define a higher probability outcome in the future if you can read very well what has happened in the past, right? because the markets are far bigger entities than any single war, or any Brexit, or any new American presidency. All of these things are already taken into consideration by the market, right? Of course, they can impact to a certain extent the magnitude of a 4-hour daily candle, of course, and they can slow down a bigger movement. But the market is much bigger than all the single news, although they appear very relevant in the moment because they talk to our emotions, right? But there is a better way to look at the markets, which is more useful. That's my opinion. So stick around if you like what I say. I'll publish much more material in the near future on a regular basis. We look at gold and silver, of course. I have very interesting things to tell you about the precious metals. And you're welcome to subscribe if you like what you hear and if you think it can be useful to you. Okay, thank you very much for your attention. Bye-bye. Have a nice day.